Welcome to quick review about the stock market. This important but short lesson will enlighten you about the overview of the stock market. You will learn things that can help you decide on what steps or direction you need to take your trading career. I am your humble mentor, Dr. Evans Osei. As always, you can call me by my nickname, D-Man. Without wasting much time, let's get to it. We will begin by looking at a case study on your screen. Your friend has been talking a lot about stocks lately. Anytime you go to work, all your colleagues talk about is how they are killing it in the stock market. You have always thought that the stock market is for the financial gurus. You also held the belief that it is a risky game and you can lose all your money. You have therefore stayed away from trading all these years. You continue to hear a lot of talk about how cheap stocks are lately due to the impact of the coronavirus. Example, United Airlines was trading at $90 and it has dropped to almost $30. You have now gradually come to realize that there is great opportunity here and you have decided to start trading. You don't really know much about trading. Where do you start? We first have to know what a stock is. Stock refers to the proportion or piece of the company owned by the shareholder. This is how ordinary people are able to invest in some of the most successful companies in the world. Let's say you came to America and you picked up a job at McDonald's. You work regular hours, 8 to 5 p.m. You always see how a lot of customers come to this place, and you see how successful this restaurant is. Unfortunately, this is not your father's or your mother's company, so there is no way you can enjoy the success that you see with your very own eyes. You always wonder how you can own part of this company so you can own part of the profits that they make every single day. The answer is where stocks come into play. McDonald's offers shares to the public to buy so that they can own part of McDonald's company. You can therefore buy their stock, and as the company continues to grow, the price of its stock increase. Hence, your shares in the company increase in value and vice versa. Let's review some of the main components that make up the stock market. First, we have the public companies which offer their stocks to trade. They list these stocks on the stock exchange, which is like a warehouse for stocks. Next, registered brokers are allowed to access this warehouse. The stockbrokers serve as an intermediary for traders and investors. This means as an individual trader, you cannot go straight to the stock exchange to buy stocks. You have to do it through a registered broker. The biggest reason we all invest relates to price. What actually makes the price of a stock change? The price changes based on supply and demand. Let me give an example here. Let's say an oil company in Ghana sells 5 million shares of stocks at $10 per share during initial public offering, popularly known as IPO. It raises $50 million in the process. That is the 5 million shares that they offered times the $10 per share. That gives you $50 million. We now get 5 million shares, which begin to float for trading on the exchange at $10 per share. The stock has gained confidence by traders and they now want to buy the stock at $10 per share. But the shareholders are not willing to sell it at that price. They want to sell it at $12. No trading will occur since the price between sellers and buyers do not match. If the buyers want to own the stock so bad, they may now decide to increase their bid to a higher price of, say, $11. The high demand will then move the stock price up from $10 to $11. This process creates a demand-supply driven price action, which eventually determines the price of the stock. In the next slide, I will give you an analogy using the ecosystem to explain how you, as a player in the stock market, should approach it. The stock market really is like a jungle. You have predators and you have prey. And at any point in time, your money can fall into one of these two categories. Lions are very active in this field and can be considered as short-term or day traders, whereas pythons probably are long-term traders. A python can swallow its prey in a slow, gradual fashion and go without food over a long period of time, whereas lions devour their prey in a fast and aggressive manner. They eat some of the meat and leave the rest for the hyenas and vultures and come back to hunt the next day. Has the analogy clicked yet? Don't worry, it will make sense shortly. Now let's look at these two pictures. What immediately comes to your mind? You guessed it. The mother deer and baby deer are in trouble. If this hungry lion is given a choice to pick one of the two deer, which one would the lion pick? I know for sure if I'm the lion, I will go for that big old deer. It has a lot of meat, probably tastes better, and I will not have to worry about getting more food probably in a good number of days if I can keep the meat at a safe place. If I go for the baby deer, I may not get enough meat to last me for a long time. I will have to come back to hunting again sooner. When will be a good time for me to pounce on my target after I decide? Do I have to hide, wait, and pounce when their back is facing me? Do I have to chase all of them when they are in a group or pick a target that is isolated from the herd? As the lion is assessing his options, he is probably surveilling his environment too. Are there a lot of hyenas who can quickly come around and struggle with me over my catch? If the hyenas show up, will I be able to easily pick up my food and carry it to a safe place? Which one will I be able to pick up easily and go? Mother deer or baby deer? Before I pounce on my target, if I see a lot of hyenas hanging around, do I have to dive myself into them and go make a catch? If I'm able to catch a deer and feed myself to satisfaction, and I see an elephant passing by, do I have to jump on it and try to kill it because it has more meat, or I just want to have some fun killing elephants? The stock market fits perfectly into these deliberations, except that we have traders on the field and we use our money to devour each other. If you lose money, you become the prey, and if you make money, you are probably a predator to someone else. Coming back to our analogy, let's see how lions typically will approach the two deer you see on the screen. The lion will probably smell them first, and this smell may give it an idea of the location of the deer. He will head to that location, look around for any danger like hyenas. He will then take a position and hide in the bush and wait patiently until the deer is closer. Knowing full well that when it comes to a marathon race, he has no chance against the deer. As baby and mama deer pass by, the lion makes the decision to approach them from the back, sneak in and gather his speed. The race is now on. The lion can go after mama deer and risk getting a kick in the face, working harder, and gets its kill with the possibility of being outrun and getting wounded in the process. After the catch, a pack of hyenas can now show up and fight with him over the big deer. He may not be able to carry the big, heavy deer to safety and will risk losing the meat to the hyenas. In this case, the lion will just take a chunk of what he can get and run away. Another option is to go after the baby deer. He doesn't have to work harder. He doesn't have to risk a heavy kick in the face and can be assured a definite kill. When the hyenas show up, he can easily pick up his meat and run into safety. Now, if the lion is well fed and not hungry and he decides to kill an elephant for the fun of it, well, he may get his kill, but he may also end up getting crushed and killed. Was it worth the risk? As a trader, you are the lion and the deer is the stock. The whole jungle is the stock market. When you find a stock you want to trade, think about how the lion will approach it. You narrow your options down by smelling the stock. You get closer and take a visual look to confirm if the stock is what you really want to trade. You watch out for risk like bad news, global events, and many more, the same way the lion will look around for the hyenas. You now pick your target, in this case, the baby deer. When picking stock to trade, you go for the easiest one that you can quickly benefit from with a much reduced risk. You then figure out what strategy you have to use. In case of the lion, are you going to chase or pounce? Do not be distracted by stocks that looks fleshy like mama deer. Go for the easiest little gains that offer the best risk reward. In case for some reason you go after mama deer and you get a kill, when the hyenas show up, take what you can and leave the rest. So let's assume you decided to go for a stock that has a high risk. Once you get some gains, take some profits and run if the hyenas show up. In the market terms, the big money selling out or the economy suffering from bad news. Does the lion has to attack the elephant for the fun of it if it is not hungry, or if it's hungry and there are other easy options like a deer? In my opinion, that is too much risk. If I have made some money trading for the day, it's time to relax. Think about what I did right and continue the next day. If you keep jumping on and buying random high-risk stocks, you may end up risking attacking an elephant, and that will not end well. You may lose all the money you have made by trading a stock that does not align with your strategy. Random purchasing of stocks is the worst habit for every trader. You may end up losing all your capital. Be wise with your trades, be picky, and be patient. After you have picked your target, wait patiently until the back of the deer is facing you. Right timing is the best key to the success of every strategy. Let's continue. You have now learned about the stock market field. As a player, what position will you want to play? There are different positions you can play based on your strategy. You can be a buyer or you can be a short seller. You can go long or you can go short. And of course, you can be a bull or you can be a bear. After we have figured out the position we want to play, how long do we want to hold on to this position? What style should we approach our position with? There are different time frames you can hold on to stocks. This strictly depends on the strategy that you are playing. Example, do you want to be a day trader or a long-term trader? You want to go short-term or you want to go for medium-term? And lastly, what style of play will you go for? You want to be a growth and aggressive trader or you want to be a conservative trader? So all these deliberations has to take place before you even think about trading. The big question after knowing all of this is, what kind of trader do you want to be? Let's go through some factors you have to consider. The style and kind of investor you want to be depends on some factors. As a retail investor or long-term investor, you can be a day trader, growth or conservative investor. Let's go through some factors you may want to consider. 1. Your work status. Your work status may impact your investment style. Some investment types involve a lot of time. If you work in another job on a full-time basis, day trading may be challenging since you may not have time to watch the market whilst you are at work. Part-time jobs may present you with enough time to be able to do active day trading than having full-time job. So in this case, it will be wise for a full-time job trader who does not have time to go medium or long-term style. Whenever you talk about pension, the first thing that comes to mind is living free from work. I'm talking about retirement here. This presents a lot of boring time for a lot of seniors who don't have things to do to keep themselves active. Trading can keep you busy in the comfort of your home or anywhere in the world. All the trading approaches can be a good fit for a retired person. Age. Age is also an important factor to consider here. People closer to their retirement age may lean towards more conservative trading than growth trading. When you are near retirement, you want to preserve your money than risk it too much, since losing capital at that age can put you in a serious financial predicament. You may not have enough time for a do over. Seniors, for example, may opt to invest in companies like Microsoft rather than investing in penny stocks. If you are young, you can be more aggressive and lean towards growth trading. Or if you have set part of your funds that when you lose will not present any problems to you, then by all means, aggressive or growth style trading may be for you regardless of age. But when you are young, even if you blow up your account, you still have a whole life ahead to be able to pick up 8 to 5 job, raise some capital, and come back to the market. The next factor I will consider here is capital. One thing I know for sure is that small accounts can grow into big accounts, and big accounts can grow into small accounts. But all things being equal, if you found your account sufficient enough, it will present you with a greater opportunity. And in this case, I'm not talking about funding with $100,000 or $50,000 or $20,000. No, I know of some people who started with about $10,000 and within a year or two, they made about $2 million. I know of some who started with about $5,000 and they are now cruising around $500,000 to $1 million. I also know of some people who started with $60,000 and they got crushed to about $10,000. It all depends on your approach. It all depends on how you learn. It all depends on your style of trading. Let's look at the next factor, risk tolerance. Every investment style comes with risk. Every individual too has their own level of risk. I have a very high risk tolerance, which has cost me a lot of money. It also at times has helped me make a lot of money. It's like a double-edged sword. Knowing your risk tolerance level is very helpful. This can be useful in selecting a trading approach. Example, if your stomach cannot take it, don't do day trading. Short-term or long-term trading may be the right strategy for you. Let's continue. You now know the factors you have to consider before you take a position. You may still be scratching your hair and asking, do people really make money? Or they end up with some chicken change? Well, some people have become millionaires, as I said earlier, starting with just some few thousands of dollars within a year or two. Others have gained their financial comfort and even quit their full-time jobs that they don't like. Unfortunately, other people also lose money. I won't use my words too much to tell you about how much money you can make or lose. Let's look at an example here. Before I use the chart you see on your screen to show you how you can make money or lose money, let me quickly explain what a stock chart is. A stock chart is a price graph that shows the stock's price. See that blue arrow? That's the price on the y-axis plotted over a time frame on the x-axis. And it also shows a few key sets of information, which includes stock symbol and the exchange it trades on. It may seem intimidating to read at first, but with some basic tips and practice, you will soon be using them in your trades. Charts shows the history of stock price, and traders use charts to make important decisions. On your screen right now is the chart for Kodak, Kodk. Very interesting chart. To answer the question if you can make money in the stock market, let's assume you were watching Kodak stock in July and you bought 1,000 shares at $3 per share on July 27th. You see that, the red arrow on July 27th? Look at what happened. The price jumped from about $2 to $60 within 3 days. How much could you have made if you sold your 1,000 shares at $50? Yes, that is $50,000 from a $2,000 investment. How will you feel to take this profit? You see that dude right there. You will be extremely happy. This is not just a fictional example. This price move happens all time in the stock market. On the other hand, let's assume you bought 1,000 shares when the stock price reached $60 on July 28th because you thought the stock price was going to $100. How will you be feeling 3 days after you bought the stock? Look at the three candles, the three red candles. You will feel like the whole world just came crashing down on you, right? The price dropped from $60 to $15. How much will you have lost? $45,000. And how will you feel losing $45,000? Not a good feeling. If you analyze how these two traders approached Kodak, one had good timing and the other had bad timing. Timing is key when it comes to trading. What am I trying to say here? Yes, you can lose money, and yes, you can make money. What then separates winners from losers? Let's look at what the people who make money in the stock market do. Number one, they make their minds that trading can help them supplement their income, if not achieve total financial freedom. Meaning you have to be ready, you have to be convinced, you have to be determined that what you see in the stock market is for you. You have to be able to decide that this is what you are going to do. You have to make up your mind that this is what you are going to do. Number two, after you make that decision, You educate yourself. So most of these successful traders educate themselves really well before they even think about trading. Number three, they work with like-minded people. Four, they have mentors to guide them in the beginning. After you become experienced, you don't need any mentors. You just have to work with like-minded people. Next, they have patience. They do not have a home run mentality. This is not gambling. You are not going to become a millionaire tomorrow. This takes time, it takes experience, it takes practice, it takes education. So, experienced traders, successful traders do not have a home run mentality that I'm going to buy this one stock, which is around 50 cents, and by tomorrow is going to be trading around $100, and I will cash out and make millions of dollars and quit my job. No, that's not how it works. Next, successful traders concentrate on the process and not on the money. These people, these successful traders, pay attention to their strategies, pay attention to the process, pay attention to what is working for them rather than how much money they are making. Because once you understand the process, the money will follow. The money is a byproduct of the process. Next, they do not see stock trading as gambling, as I said before. They manage their risk and they take profits. Lastly, they are determined to succeed and they never quit regardless. Eventually, when they go through all these attributes, they develop the skill and the success follows them. Let's look at some of the beauty of being a successful trader. One, make money on your own time and your own terms. Two, you can live in a remote village. I come from a small town in Ghana, West Africa. If I want to go home, all I need is to get myself a laptop and an internet connection, and I'll be able to trade from my remote village of Ankasi and make money all day long. See the beauty of it? So you can live in a remote village and still make money using only your laptop with internet connection. Even if you get fired from your job today, you have a gateway to make money whilst you figure yourself out. The liberty to live free from the dictates of your job is one of the beauty of being a successful trader. You take vacation on your own time. You don't have to worry about a manager approving your vacation or not when you have financial freedom. That should be our goal towards trading. Next, make trading a hobby and enjoy making money whilst in retirement. One of the beauty of being successful in trading is that it stays with you throughout your entire life. It's a skill that nobody can take away from you. Every corner you are in the world, you can use that skill and make some money. Whilst in retirement, most people don't even know what to do with their time. They get bored easily. If you have the skill to trade and you are In your retirement, you can even stimulate your brain all the time by making the trading your hobby and in the process still make money. You can be cruising to your vacations regardless of wherever you are. You will get yourself occupied. Lastly, when it comes to the level of your success, the sky is the limit. Now, the final question is, have you arrived at a decision to explore trading? If you have decided and does not know where to start, have no worries. We were all at that point before as we got here. You see the guy on the rock? Yes, probably got some plans on his head, but where does he start? Does he jump? Does he turn back? Does he climb? He is in total dilemma. But I'm here to tell you a journey of 1,000 miles begin with a step. When you look at the second guy, he is just, descending on that stairs confidently. He has not reached his destination yet, but he has his eyes on the destination. As you can see, he's not looking at his feet, he is looking ahead whilst taking the steps one at a time. Do not go at it alone. The biggest mistake most beginners make is once they make some few dollars, they feel they have figured everything out. Most also take it too lightly since we only two buttons to deal with when it comes to trading. One is buy, the other is sell. And therefore approach the market with the gambling mindset because it's so easy to just assume, oh, let me buy and it's going to go up. And when it goes up, I'm going to sell is a big wrong way of looking at things. That two buttons has a lot of information that has to feed into it before you press a buy or a sell button. If you really mean to become a successful trader, then the first step is to invest in yourself. One lecture like this one, what I'm giving you right now, cannot make you become an experienced trader. One successful trade can never give you the skill to last long in the game. Educate yourself first, regardless of how long it might take. In order to help those who are serious and ready to embark on this journey, I will be offering a lot of free webinars on a variety of topics as we move on. I have already spent over 10 hours on an eye-opener step-by-step guide of the stock market that takes you from amateur level to a confident trader. The Stock Market: Immigrants' Guide to Success is available on my website www.givencity.com. I did not stop there. I also have membership subscriptions that give you access to all my live classes and webinars, teach about the emerging technology of blockchain and cryptocurrency, offer video lessons, answer all your questions, research stocks, keep watch lists, and many more. I hope you have gained a knowledge or two from this brief overview of the stock market. Thank you, and I'm ready to shine some light on any questions you may have.